Hello, everyone. This is Justin Smythe from NextBigTrade.com. This is your weekly sector review for December 29th, 2023. Starting off with BOTS, the Artificial Intelligence ETF. This ETF was up a little bit more than the S&P 500 this week. But as we take this rally into consideration as a whole, the artificial intelligence stocks have still been struggling towards the tail end of this rally for the last couple weeks. That's not a good sign. If you look at the volume that's come into this sector throughout this entire rally, it started off kind of strong like in early November when Palantir and some of the leading stocks in artificial intelligence started breaking out, but then once Palantir started struggling, some of the other stocks really never got going either. There was some late breakouts with stocks like Path, ESTC breaking out on heavy volume after earnings, but as a whole, this sector struggled much more than it did during that May to July time frame where the volume really came into the sector and there were some powerful moves higher. So this rally just simply never materialized like the previous one did. Perhaps there's some issues coming in maybe as we start 2024 that we're not even aware of yet. But interesting how this dynamic worked out. And really the cryptocurrency stocks were the ones that were the leaders during this last rally. So overall, I think even if we do have a pullback in the overall market, artificial intelligence might set up for another run next year, but we'll want to see how the stocks act, and we'll want to see these leaders really start to break out on powerful volume once again and kind of reestablish outperformance against the S&P 500 as well. A lot of these stocks just never got going on this latest rally. The volume in the chat ETF is another example here where you can see how the heavy volume was there when this ETF came out, but on the recent rally, it's just not there. So again, another kind of differentiator between what happened back in the middle of the year and what happened during this last rally where we just never really got going for this sector. Now turning to cryptocurrency, obviously the major winner of this latest rally, but the volume came in to the downside this week, closing towards the lows of the week, and the individual stocks really took some massive downside volume. So this sector's under some distribution now, and really it's going to depend on what the cryptocurrencies themselves do as we start 2024. If Bitcoin can hold up, there's a chance that we could just have a shallower pullback and perhaps this rally lasts a little bit longer. But if the currencies themselves give way, then all bets are off really. And I don't really like the downside volume on the individual stocks. When it's that heavy, that's usually a sign that the rally is being sold into and the institutions are going to overwhelm any more buying pressure that's coming into this sector. So watch how it acts as we start 2024. If it does start holding some of these key moving averages, that would be okay. But if not, things wouldn't be looking good there, and probably for the overall market as well. Next, turning to the Chinese Internet ETF. Many failed breakouts this year, but pretty good action last week, up almost 5% during a slow week. This is still set up to break out into stage 2. This is definitely one of the top sectors to watch as we start the new year, and one contributing factor to this sector potentially is weakness in the US dollar. Now the US dollar did have a nice hammer candle on the weekly chart as we closed last week's action, and there's definite possibility for a counter trend rally here back to key moving averages. I think how the US dollar acts around these moving averages would be a good indicator to know whether we're finally going to roll over into stage 4 here, or whether we're still going to remain in stage 3 and kind of move up and down around the moving average. So watch how the US dollar acts on a counter trend rally back to these key moving averages. The precious metals gave up some gains to end the week. Gold is still struggling to break out. Not surprising with the market coming under pressure at the end of last week. You can see gold reversing at its highs. The good thing about gold here, though, is it does have room to pull back during a correction and still hold these key moving averages. So gold could still be set up to break out even after a correction in the stock market. Silver pulled back a little bit more. However, volume was on the low side, and the mining stocks pulled back as well. The one thing that was bullish, though, is that we've got the silver mining stocks were actually down less than silver last week, which is interesting because they usually leverage silver on the upside and downside. So seeing these hold up well is bullish for precious metals. We'll see if they can hold these moving averages as well if we get a bigger pullback. And finally, the cannabis stocks look very interesting here. We've got a nice stage 1 base. We've got some volume that's still kind of creeping in here. And the volatility has kind of contracted here as well. We've got kind of a nice tight trading range around the key moving averages. So this is set up to break out potentially early in 2024. We just might need to process a correction first in the stock market. So watch how this acts if the market does correct, but this is a key sector to watch as we start 2024.